In this video, I'm going to reiterate why I believe Tesla is going to $77 a share. And it has nothing to do with the company as a whole.
Best of Us Investors presents Carrie Griegmeyer.
Over the last 15 years, we've been on this liquidity Milky Way of funded money by our government. And that's where, they quantitative easing, they got us out of the financial crisis. That is that money that came into the system during the COVID pandemic in 2020. The money that came into the system, those checks that went into your pocket, well, over the last 15 years, that amount of money equates to about $9 trillion. And that sits on the Federal Reserve's balance sheet. Well, that balance sheet has gotten so big and interest rates got so low that really there's no other option other than to start to get rid of that balance sheet. Well, how did we get that balance sheet? And what does that represent? And what does that have to do with Tesla? So during the financial crisis, what was the biggest problem? The biggest problem was liquidity. There was enough oil in the engine. And so what did they do? What did the Federal Reserve do? The central banks throughout the world do? They injected money into the system through the printing press. And they did that through ways of, say, lowering interest rates and making money more affordable. But when that only took us so far, they had to do more. So what they did was they lowered interest rates to very low levels, which made money cheap. But that only can take you so far. And so the next step is, well, to basically issue dollars into the system, and you go basically print dollars and pay that out to the prime brokers, and then they go out and buy, say, your loan, your car loan or your home loan, mortgage loans, student debt loans, and they basically take that all on, and in turn they put US dollars into the system, and then they take on the debt onto their balance sheet. Well, over 15 years, that balance sheet grew to $9 trillion up until about a year or two years ago or so. And so now they're in a position where they have to unload that balance sheet. And the reason is because, well, the economy's gotten a lot better. Things are a lot stronger. Markets are better. We're no longer really in a pandemic. And, well, it's a good time to raise interest rates and sell off that balance sheet and put that balance sheet into the system. Well, when you sell off that balance sheet, you're taking dollars out of the system. You're taking liquidity out of the engine. So it'd be like you'd go to Oil Express and you do oil change. And after you did the oil change, the car's running great, and you start to drain the oil out of the car. Well, eventually what will happen? The engine will freeze up. Well, if the engine freezes up, you stop. You don't go anywhere. That's essentially what is starting to happen. Well, over the last 15 years, what did we spend that money on? That liquidity on? Well, we expanded. We got richer. Baby boomers grew their growth. The stock market went up, inflated higher. And we started to put money into programs or technology that wasn't there 15 years ago. And one of those is electric vehicles, aka Tesla. Well, as we pull money out of the system, as the Federal Reserve and other central banks pull more money out of the system, we all of a sudden have less money to spend. Fast forward to a year ago or last year, and the baby boomers all pretty much started to retire. So the peak retirement for baby boomers. Well, what are they doing now? They're not, instead of putting money into the stock market and pushing markets higher, they're not out buying new technology like electric vehicles or AI or stuff like that. Instead, they're getting conservative and they're pulling money out of their portfolios. Now, it has been said that the baby boomers are the richest generation in history. Well, if that's the case, what are the baby boomers doing right now? They're spending their savings, they're spending their wealth. And as the stock market has peaked in November, January of 2022, November of 2021 area, what has happened since? Well, the stock market has gone down. What has continued to happen? Baby boomers and individuals have continued to spend more money. What have we been seeing in basic need stuff like eggs or orange juice? Orange juice year to date is up over 30%. That means more money has to come out of the system, meaning more money has to come out of an individual's portfolio, and less money can go to items of non-necessities. It's expensive to get electric vehicle. It's expensive to charge electric vehicle. I don't know about Tesla, but I've watched a couple videos on the Fords and the GMCs, and it's ridiculous. So what are they going to do less of? As the market goes down, they're going to spend less money on things that aren't really necessary. I can buy a used vehicle, a combustion engine vehicle, for anywhere from $5,000 to $20,000, and I can get probably about 5 to 10 more years out of it if I take care of it. So I'm not going to spend that money anymore. And as the Fed continues to raise interest rates, probably another, 1%. So we get up to 5.5%. And if they really want to shrink that balance sheet, and it took them 15 years to grow it, and if they really want to shrink it in, say, the next 5 years, that's $9 trillion that took to be built up. That's $9 trillion coming out of the system. What does that mean to you and me? That means there's less liquidity or less oil in the engine. And if I have a choice between buying a not really necessary item like electric vehicle, which is costly to make, it's costly to get the products to make the car. And I'm not just picking on Tesla, I'm picking on all the automakers, but Tesla in particular because of its craziness in price movement in the last, 45 days or so. And so what I'm considering is, why would Tesla continue to go down towards my price target of $77 a share versus what it is today? I think it closed at right around 198. So it's down off its high over the last couple of days. And what's gonna move that? Well, it's not because you don't want electric vehicles. It's not because you don't believe in green energy. It's because you have less money to spend overall to buy such a vehicle. And as the market continues to go down and that super wealthy generation, baby boomer generation, continues to, not spend and start to pull money out of aggressive positions like high beta, high technology, high growth stocks, and into more conservative assets like treasuries and cash, you're going to see less growth in the stock market, which then bleeds down into the individual companies such as Tesla, such as Apple, such as Microsoft, Google, Facebook, Broadcom, but maybe not Pepsi, who is the number 9 biggest holding in the NASDAQ 100. Go look at it. I'm not going to give up my little sweet treat of Pepsi versus I'm going to give up buying a Tesla. And that's why I believe Tesla is headed to 77. Not because of the technology, not because it's some fluke of a green energy thing, but rather a lack of liquidity in the system. And over the next 12 months, 5 years, I believe you'll see less and less Teslas, electric vehicles on the market, because we'll have less and less money to spend. So that kills the whole green energy movement. Or maybe just temporarily kills it. But in the short term, it could produce a great buying opportunity for future technology that will change the world. but not today. Because, well, your wallet's just getting thinner and thinner. And we saw that today in the stock market, that being the 21st of February. And Tesla was a part of that fall, along with the other high beta, high risk stocks. We don't need another cell phone, which is why Apple's earnings will go down over the next 12 months. I don't need to upgrade my software, which is why Microsoft will go down over the next 12 months. And by God, I don't need an electric vehicle. And that's why Tesla will go down.